Hey guys, welcome back and Happy New Year. In today's video, we're going to be going over the 2025 and Q4 box office numbers and my estimates for Q4 and entire 2025 net income for AMC. Maybe we'll touch on the Q1 cash burn. I did update my estimates for all of the quarters next year, and good news, I was able to increase my Q1 estimate a little bit, which helps. Let's see if we can get this video finished, edited, and pushed out onto YouTube before our movie tonight. And I have some movies up on the screen. Leave me a comment down below which one you think the redhead picked. Did she pick the zombie movie, We Bury the Dead? Did she pick SpongeBob? Did she pick Song Song Blue with Hugh Jackman? Or did she pick Anaconda? Let me know your thoughts down below. Now, without any further ado, let's get into the Q4 estimates. It is true that 2025 as a whole did not live up to our expectations that we had back in January. It didn't help that we had big movies like Michael and Mortal Kombat 2 get pushed into 2026, but on the bright side, they will help 2026. The total numbers for the year 2025 came in at $8.64 billion, a little bit better than last year, but not as good as 2023. With December 31st numbers now in the bag, we know that 2025 Q4 ended up at $2.17 billion. Not as good as 2024, but it probably would have been if we would not have lost those two tentpole movies, Michael and Mortal Kombat 2. Here are our top 10 movies for 2025, with a Minecraft movie coming in at number one, $423 million. And, you know, the top 10 movies this year just didn't hit like the top 10 movies in previous years. 2024, we had two movies over 600 million domestic. And in 2023, we had Barbie and the Super Mario Brothers bringing in 636 million and 574 million. Hollywood just didn't put out movies this year that people wanted to go see in those sort of numbers. Hopefully things look better in 2026. Looking forward to 2026, there is an exceptional slate of movies planned, with more constantly being added. So I will update my numbers for the year as new movies get added and as we get some insight into how pre-sales are going for those. But right now, you know, depending on who you ask out there in the professional world, the numbers for 2026 are coming in between 9 and 10 billion. And I've even seen a few of the movie accounts, not AMC investors, movie accounts like Empire Box Office on the X platform, anticipating maybe we even exceed $10 billion in 2026. I'm not going to go into any details about what I think the 2026 numbers are going to be other than that range, $9 to $10 billion. In this video, we're not going to go into that detail. This video is not a rah-rah session for 2026. It is to digest what we think Q4 numbers are going to come in at, and in Q1 also, because we have the Q4 positive cash flow that we expect, and we have the Q1 cash burn. And right now, for investors, with all of the corporate actions that are going on right now and will be happening in Q1, I really think it is critically important for everybody to be focused on Q4 and Q1. Let's get those behind us, and then we can focus on how awesome 2026 is going to be from Q2 on. Once we get to that point, let's get through these tough times and not just shush them away, not put our heads in the sand. There is going to be a little bit of cash burn to deal with in Q1, and I don't think you should minimize that. You should understand it if you're trading this stock. The better informed you are on the numbers, the better any decisions that you might make will be. I am sure there will be a coordinated campaign to get people to not focus on Q1, and I will be paying attention on social media to who is telling you not to focus on Q1. They will do it in sly ways by just skipping right over it, calling it just taking a breather. Let's talk about Q2 through Q4. I think this is disingenuous work for investors. You should be focused on what the impact of Q1 is going to be. And maybe we'll talk about that at the end of this video. Let's talk about Q4 right now, though. Considering the Q4 domestic box office of $2.174 billion, I kind of do a range on my forecast, depending on what percentage of the box office AMC got. And we get, for that range, total revenue between $1.1 billion and $1.267 billion. I think that it's going to come in very close to this 1.18, maybe 1.2 billion for Q4 on the revenue side. And that includes the adder for extra food and beverage sold thanks to Stranger Things. Remember, Stranger Things was a $20 voucher for food and beverage. From what I understand, Netflix did not charge anything for the tickets themselves, so there is no adder to box office from Stranger Things, but all of the theaters that showed that film sold a $20 food and beverage voucher, and so that goes straight to food and beverage revenue times however many patrons AMC had on December 31st, which shows up in these Q4 numbers. And then January 1st, we'll get to add a little bit for food and beverage to Q1. It's not a huge amount because of the limited showings and limited days, but hey, every few extra million that we can put on the revenue side, we're going to take it. And I'm glad that people went out and supported watching the final episode of Stranger Things Season 5 in the theaters. From the revenue numbers, we have the usual expenses that we got to deduct till we get down to the net income. I want to highlight a couple of those operating costs and expenses that might be different in Q4. Rent I have as flat. Don't forget, in Q4, we have the impairment of long-lived assets, and I have that estimated at $42 million. For Q4, that is a non-cash impairment as they write down the value of long-lived assets. It won't impact cash, but it does impact net income and earnings. Next is corporate borrowings, or the amount of interest that AMC is going to pay for Q4. And I know this is a hotly debated topic. I see a lot of people making some sweeping generalizations about Q4 and quarters into next year as interest rates come down. Don't forget that the interest is calculated based on rates that were in place at the beginning of the quarter. So I try and track that and estimate it every quarter. And I have done that for Q4. I was $1 million off in Q3 on my estimate. For Q4, I have it at $118 million based on my calculator. And AMC's current debt and the interest rates that were in effect for Q4. If some additional debt gets paid off based on the new exchangeable notes in Q1, we'll recalculate it for Q1, and the SOFR rate is also going down. We'll get to that in detail when we know what happens with the exchangeable notes, but it's not going to be this huge burden lifted off of AMC because a very small amount of debt gets paid off through the exchange of notes. It'll be some impact. It won't be a meaningful impact, but it's good to have the number go down. The trade-off is you will have some shares issued in exchange for writing off that debt. Bottom line, in terms of GAAP net income, what am I expecting? You can see at the bottom of the screen here, a range between negative 123 million and negative 190 million. And I'm going to say it's probably going to come in close to negative 165 million, the middle of the road number there, depending on what percentage of the box office AMC captured relative to its competitors. Now, that is GAAP net income. There are some non-cash expenses on here. And I think the narrative is very quickly going to shift from let's not talk about net profit or loss. Let's talk about operating cash flow and free cash flow, because the management told us that they expected the last 3 quarters of 2025 to be cash flow positive. Now, I have run my operating cash flow and free cash flow calculator, which is further down here in the spreadsheet. It's very difficult to estimate these numbers because there's a lot of moving parts. And there's also things related to the timing of accounts payable and accounts receivable that can meaningfully change the free cash flow and the operating cash flow that are hard for me to estimate because I'm not sitting there in the room with the finance guys at AMC, and we won't know the actual numbers till we know them. But I think based on my calculator, what I'm seeing here, even with a net loss for the quarter due to the timing of revenue coming in and the bills for that box office not being due till Q1, it will be a positive operating cash flow and positive free cash flow for Q4. And if we look at Q2 and Q3 netting each other out, that means that for the last 3 quarters of the year, it is very likely that the management is correct that there is a positive free cash flow in Q4. But the piper still will have to be paid in Q1 because the box office is going to be lower in Q1, and all those bills from the revenue that came in Q4, the bills will hit in Q1. So you get that traditional Q1 whammy, and you guys can go look at cash flow by quarter. This is, not being negative. It's just the reality of the business. When we look at cash flow for Q1, it's almost always negative. Negative $370 million operating cash flow in Q1 of this year. Free cash flow was negative $417 million. If we look at Q1 2024, negative $238 million. Q1 2023, negative $237 million. It's just related to timing of accounts payable and accounts receivable, plus the fact that Q1 is a little bit slow, and so you don't have as much revenue and cash coming in. You should expect a cash burn in Q1 2026. Why do I highlight this? Because free cash flow gives you a good idea of what the cash shortfall is going to be. And don't make the mistake of looking at net cash flow, because that would include, like in Q1 2025, issuance of common stock to raise money. So don't let people misdirect you and say the cash flow was not bad for Q1, only negative $253 million. Yeah, the difference between these two is the fact that they issued almost $170 million in stock. So, somewhere probably for this upcoming Q1, 200 million, maybe a little bit more, is reasonable. And why does that matter? Because when we finished Q3, the most recent quarter, the cash and cash equivalents on the balance sheet was the lowest it's been in recent history. And so liquidity becomes tight. Now, is this a hair on fire emergency? I'm not saying this is a red alarm hair on fire emergency, bankruptcy imminent. I'm not saying that. But if there is a cash burn due to negative free cash flow and cash is getting pretty low, then the company has 2 options. Go beg everybody, to the lenders, to give them a little bit of leeway on the amount of liquidity on the balance sheet because things will be better later in the year. Unlikely, but possible. The other more likely scenario is the company will sell some shares in Q1. That's my leading theory, my leading expectation right now, that the company will probably, unless there's some news we don't know about, the company will need to raise some cash in Q1. And they have that ATM now of up to $150 million available to them starting February 2nd. Thankfully, they sold the Hycroft shares. They still have the warrants, but that brought in an extra $24 million. So that helps alleviate the pressure a little bit. And they have the popcorn pass. I don't know how many popcorn passes will be sold, but that's cash also that flows in on Q4. And so I'm looking forward to seeing those numbers when we get the Q4 results. But the net of everything is there's going to be some cash burn, depending on how severe it is or how minimal it is, will help us look at and think about how many shares will be sold in Q1 should the company see the need to raise additional cash to cover any Q1 liquidity shortfall. So just keep that in your back pocket, something to think about. Not trying to scare you out. I don't work for the shorts. I just look at numbers, and these things are very predictable to anybody who looks at the numbers on a regular basis. And the people that do look at the numbers on a regular basis who don't want to be honest with you are just going to skip over this or tell you I'm being too bearish or tell you AMC's just taking a breather. You know, all these euphemisms for let's not look here. Let's look at Q2 through Q4. Hey, those quarters are going to be great, but you should probably expect the company might need to raise a little bit of cash to patch them through Q1 into Q2 and beyond. The final thing that I want to talk about, if you stuck around this far, congratulations, because I'm seeing a lot of, in my estimation, people not understanding how Capex works and influencers telling people already that Capex is going to go down starting next year because all the Go plan was already implemented. Look, from my best look at this and thinking back to management comments in Q4 2024, my research tells me that the Go plan is being financed and it's going to affect OPEX. It's not really showing up in Capex because Capex has remained steady. In fact, 225 to 245 million per quarter, trailing 12 months. I don't expect any changes to the downside for Capex. And management has said the opposite, actually, that as they have access to more capital, that Capex will probably increase. Look, 225 to 245 million to run a business the size of AMC's for Capex is very, they're scraping the bottom of the barrel. It's very difficult to cut anymore. And as you have more people coming in, more maintenance, and they will still have some ongoing upgrades and things like that. Capex, if things get better, you should expect it will go up. I do not agree with anybody who's telling you that Capex is going to go down. Management will let us know their forecast for Capex either in Q4 or Q1, but I want to highlight the comments that they did make back in Q4 of 2024 that AMC is using creative financing options. This is what I'm talking about. The Go plan is paid for through financing, which I believe is being tucked into operating expenses, and the Capex will remain somewhere around 225 million until AMC has access to growth capital, in which case the way you read that is Capex will go up. They need to spend more to maintain the properties and grow the business. It will not be going down. They also state, like I said, that if there are changes to the forecast or the budget for Capex, that they will notify us, and they will do that. They usually do it at the beginning of the year. They'll tell us what the plan is for the next 12 months. So we'll find out from them when we find out. My expectation is, look, next year is at a minimum probably going to stay flat, very comparable to what this year is. You should not expect, in my opinion, any reduction in Capex. And we'll find out if I'm right in short enough order. To recap Q4, I'm expecting the total revenue to come in between 1.1 billion and 1.3 billion, probably very close to 1.2 billion. And the net profit or loss, I'm expecting to range between negative 123 million and negative 190 million, with my best guess probably around negative 165 million. Positive operating cash flow and positive free cash flow for Q4 and the totality of Q2 through Q4 doesn't offset the huge negative cash flow in Q1. And you must not neglect the fact that the annual free cash flow is a big negative number. That drives the need for raising capital through selling shares. And so we'll deal with that cycle again in 2026. And hopefully the box office is better in 2026 and the company stacks some more cash towards the end of the year. Stock price, $1.56, closing on the last trading day of 2025. Not great, but you know, if you're in my Discord, we've been I've been telling people that it was headed here to the $1.50 range. I've been telling my Discord to expect this since July when we read the updated debt document. So this is no surprise to me, and going a little bit below $1.50 would not surprise me either. I really want to see the 8K filed that lets us know the VWAP measurement period for these new exchangeable notes is over, and that the notes have been, the exchange rate has been locked in. Until then, I think, this is just my opinion from reading loan documents, we know that the lenders have a collar on the exchange rate between $1.50 and $2.75. We know that they get the most benefit if they drive the price down close to $1.50. And we know that it is a average of the VWAP during the measurement period. And many of the days since the vote were above $1.50. So how do you get the lowest average that you're allowed in the collar of $1.50? You drive the price lower than $1.50 to compensate for the days that it was above. Now, will the market allow that? I don't know. The market hasn't really seemed interested in stepping up to buy AMC, and the lenders have all the incentive to keep pushing the price down until the VWAP period is over. And conveniently, AMC left that out of the documents. All the filings in July did not disclose the VWAP measurement period that we're in right now for these exchangeable notes. Was that on purpose? Was it an oversight? Are they just trying to keep us in the dark so we can't guess? I don't know. But I could guess that the price would be driven down to $1.50 in the July filings. It's all documented there. We've talked about it. This is not being bearish. This is using common sense to interpret company filings, disclosures to you. And it is why I always tell you guys, always read the filings. Thank you so much for watching. I hope you learned something today. If you're new here, don't forget to hit the subscribe button. I am Tony Denaro, and I will see you on the next video.
So you wanna go